Eagles. It's not Monday, it's Tuesday. Hope everyone in the U.S. had a nice long weekend. So hats off to Blake. On Friday, he said a short squeeze and the dollar could happen. It was happening. Had a little follow through in the partial session. Good follow through here. I still favor one more low. I think this is one drive. This is two. And I think there's one more to come. Is it going to come from here or up here? We start getting back through 90-20. It's looking pretty good. In fact, the fact that it's back above this level right here at 90, it's trying it. So we're back testing the back line on the weekly. Let's see if I extended it all the way out. Well, you guys know what I'm talking about. Put it here. So we've been on both sides of it. It's starting to look meaningless to me, but you know, it's not. If we get through it and stay above it, then you have something going on. I still think, because on the daily we had a confirmed low, makes me want to look for buying opportunities in the euro. We have a great guest today who is a euro bull, so stick around for the interview. He's traded for major banks, a very long career. I asked him if he had a one-year track record at least that he'd be willing to show that's profitable. Just a question. We're not going to do that. He said yes. So stick around for Fabrizio at Warburg 100 at the top of the hour. He's got some interesting targets to the upside in euro and interesting methodology of how he comes to those conclusions. Also, Blake made a great call in the S&P, although there was one last jiggle Friday. And, you know, it got through the 61.8, but failed right at the 200 on the 4 hour. And then the news broke about more indictments and it sold off, and we're getting some follow through today. You know, this action, unless it really just starts gaining momentum, I know a lot of people are bearish, and this was a shorting opportunity at 27.50. But what I'm favoring, and it doesn't mean it's going to happen, would be one more break in the dollar, one more shot up in the S&Ps, maybe towards the 2770-ish level, and I would take a shot there with bearish ETFs for my own account. And that's about all I have. I'm glad I advised people last week to abandon the long side of the euro pound as it's under pressure, so it didn't get through the top level. And you know what? Steve was right. You know, do nothing until it does something. And it's winter here today, Blake. I mean, I go out on my deck. Is it cold there in the desert too? It's got to be
freezing. Yeah, it's freezing. Good morning, Dale. I mean,
how are you?
It's about as cold as we get. I thought we were done with the cold spells, but we had one more left in us. 30
out there or something. I thought I was in Chicago. I was transported to Chicago this morning.
That's cold for your neck of the woods.
Well, you know, I don't know how I grew up in it, buddy, because now I could barely tolerate, 40 degrees. But I don't know. I used to walk 2 miles in sub-zero temperatures with my hockey gear to go play outside. I don't know how I did it.
that's pretty cold. Yeah. Pretty cold, my man. So yeah, we're it's a little chilly here, so and we've got like 1 week one week of it, and then I'm sure we're gonna start to suffer as summer is upon us. It feels it doesn't feel like it today, but it's coming. So did you have a good weekend, long weekend?
Yeah, I love the Olympics. You know,
Oh, so you spent most of the time watching the Olympics?
yeah.
Oh,
Yeah.
good. I did not. So
Well, you know, you have kids.
I know
And
it's sports
busy.
all the time. Yeah.
And my wife has pneumonia, so I'm taking care of her watching TV. But
Oh,
you know, I'm just so inspired by the hard work. You know, I think it takes the same type of hard work to become a world-class athlete as it does to become a world-class trader, at least on the mental level. You know, they're all very highly trained physically, their bodies, but so much of it is mental. You know, meaning, you know, this is a trade I have to make count, and their mental toughness is what amazes me. How long they'll
yes.
strive for one goal. They don't do it here. You know what? They're gonna, if they're not too old, the next 4 years they dedicate themselves every day to getting on the podium next time around. To me, that's a winner.
Yeah, the dedication that they have to their game is pretty amazing, and I think you're right. It takes a lot of, you know, people think that, oh, you know, trading, it's so easy, you know, I can just step in and, you know, just start making money. It's, you know, but it's really not the case. You know, and I tell people, I have to, you know, try to explain to new traders, this isn't a get rich quick anything. You know, it takes years of polishing your skill and screen time, and you know, and really studying to understand the dynamics of the markets, and it's, you know, it's same type of rigorous training that you would do, yeah, as an Olympian. I mean, or, you know, any type of athlete. And but you know, I don't know if there's any other, there's not very many other type of I guess you could say careers or career paths, or, you know, even the satisfaction from you know, being able to really reap rewards from the markets, and probably very similar to like to like an athlete, I would assume.
Yeah, winning a race.
Yeah.
Yeah.
So
Okay.
so
Well, enough of Olympic metaphors. Huh?
enough of that. Yeah. So you know, as far as the
Good call
dollar,
on the dollar last Friday, Blake.
thank you.
And the S&P, even though there was one more jiggle. You know?
Yeah. So well, you know, we'll go to the S&P here in a second, but here's the, whoops, that's the dollar Swiss. That wasn't what I was looking at. Here's the euro dollar, and I got a little bit of drawing here because, you know, first of all, we had a false breakout above those highs, and that was pretty telling. You know, to get dollar follow through wasn't a surprise to me. I actually shorted the euro yesterday at 124. I closed it out at 123.75 overnight on a limit order. Obviously, a little too early, as we broke through that support. But we're coming to probably pretty key support right through here. It's going to be around the 123 level. So how we react from 123 is going to be very critical. The fact of the matter that we made a false breakout above the highs, that does risk a move lower. So you know, the risk of a move down here is possible, or, you know, maybe even a retest of like 122 somewhere in here. It's quite possible at this point. I am not long the dollar at this moment, but I'm not saying that I won't be either. You know, I'm trying to figure out where the best place for me to buy dollars is, or you know, possibly. Excuse me, I slept in a little bit yesterday. So.
Get that comment during your yawn.
I know, sorry, can't help myself. Can't help myself early in the morning. You know, it's interesting. I don't yawn when I'm just sitting here, but when I start talking, all of a sudden I start yawning. You know, it probably explains the fact that my brain needs some oxygen right now. Anyway, the question is, you know, what are we going to do when we get here? That's really my question. So would I be a seller of the euro dollar on a rally? I would be. If I could find a rally to sell into, maybe back up to 124, that would be a very nice opportunity to be on the short side, I think. But right here, you're kind of in no man's land because you're getting close to, everybody knows we're getting close to trend line support. And at the same time, everybody could, see that we've come pretty far just over the course of the last couple of trading sessions. So the question now is, where do we go? Where are we going to go? And I think that the decision is going to have to be made when we get closer to 123. If you look at the cable, the pound failed at the 618 retracement. We were looking for this. This is I drew this on Friday. If you were ForexAnalytix subscriber, I don't know if it's still up there. It was from Friday, so we'll see. 4 hour. Yep. We were here on Friday. You could see this, and obviously we played through to the downside. So if you're ForexAnalytix subscriber, that didn't surprise you at all. The Aussie dollar also failed at the 618. That provoked a pattern in play. As you can see, a pattern in play here for it's interesting. We have a pattern play at the 618 fib, and then also Grega has a similar pattern in play on the Aussie dollar, which when you have both Elliott wave and Elliott wave and basic technical analysis point in the same direction, that's it's pretty powerful when you have both type of analysis going in the same direction. So the Kiwi dollar, we have a potential double top here, and we've already started failing. This is from Friday, obviously. The US dollar Canadian is a little choppy. I'm not really too sure what to do with the dollar Canadian. I know we are coming into this this big downtrend line, key resistance around the 127 level. Should we get up there? So I'm really unclear of what I want to do with the dollar Canadian. Dollar Swiss, we had a nice little false breakdown, in the dollar Swiss, pivoted off the 88% retracement. The US dollar Norwegian krona is getting a nice bounce. The US dollar Swedish krona, really a significant bounce on some inflation data. Matter of fact, Citigroup, they got stopped out of their short in the US dollar Swedish krona. I read that earlier this morning. US dollar Mexican peso, you can see we're rounding out. This is also the 200-day moving average. You can see it here on the daily. Pivot off the 200-day moving average from the end of last week, and we're in this like little channel. So the dollar Mex, if you're short, you got to be a little careful here, especially if we have some risk aversion that could provoke a little bit more dollar buying, especially against the peso. And we talked about the S&P, and you had mentioned we got to the 618, just a little bit of an overshoot, and then we've reversed. And if you haven't seen it in the S&P, we have a little head and shoulder pattern here, okay, and there's the neckline. So I mean, the S&P should make it back down towards below 2,700. That at least just from an intraday perspective. Are we going to go there today? I would think we probably try to make it down there today, but the stock market's down right now. You have to see how we're going to open at the open. At the open, it always seems like there's some sort of demand for equities. So, and you can see it in the Dow futures as well. We have a nice little head and shoulder pattern here that also points lower towards the spike low down here at 24,800. It's about 800 or 200 points from where we're at. So I would think that the stock market might get a lift at the open, but probably will fade, if we do get some sort of buying that comes in at the open. But overall, Dale, I'm not really super confident with the dollar right where we're at. And this is an hourly of the dollar index. If you played it on the long side the last couple of days, you benefited.
Yeah.
Yeah, from that, but it's not so clear where we're at right now. You know,
Yeah, it looks like no man's land over the trenches in World War One.
It is, and so with that being said, you know, I'm not really comfortable. You know, I'm not really comfortable at this point being you know, well, I don't have any dollar positions at the moment. Matter of fact, I think this is probably.
That speaks volumes right there.
I'm sorry.
That speaks volumes.
Yeah,
and,
yeah.
You know, and you know, it's okay to, you know, not have an opinion if there's no opinion to have, or trade.
Yeah. You know, I'm about halfway to just from my overnight, you know, short in the euro. I had a little short in the Aussie too. I took some profits there. I mean, I've made half of what my daily goal is for myself already overnight. And you know, that's not spectacular. You know, I have a let's talk about that for a second. I have a daily.
You know, it would be instructional. I don't know if you want to share it, but I bet people would be surprised at what your daily goal is.
My daily goal? Do you really want to know what my daily goal is?
I do.
It's 10 grand a day. So that,
okay, that's percentage. That's a real number for people to get.
Yeah, I mean, it's only half a percent. Half a percent.
Okay, but, see, people would be surprised at that. Okay.
Yeah, I mean, you know, so I try to, but you know, for me,
but that's great. 0.5% a day.
It is. But I try to overachieve my goals because there's a lot of days that I don't come, you know, I'm negative or you know, I fall short. So if I can make, you know, if I can, you know, do better than that, I'm going to do better than that.
That's 10% a month, 100% a year.
Yes, that's what it would come out to be. But you know, I overshoot. You know, sometimes I try to, you know, obviously make a little bit more. There's a lot of days that I make a whole hell of a lot more. And there are days that I lose money too, and it's all got to even out. But if I can walk away, you know, making my goal in a day, then that's great. You know, that's fine. Then I can, you know, walk away and go, okay, well, that's fine. And my goals actually, just so you know, my goals actually scale, and it depends on what point of the quarter I'm at and what my allocation is. So, you know, those will vary, but at this point in time, that's what it is at this moment. So, but when I reach like my daily goal, that doesn't mean I'm going to quit either. But if I'm also in a situation where I'm like, okay, well, I'm not really too sure what I want to, you know, what I'm going to do here. Excuse me. And I don't have a lot of conviction, excuse me. If I don't have a lot of conviction, then I'm just going to stand aside too. There's nothing wrong with that. There's nothing wrong with standing aside and letting the market, you know, figure itself out, because there will be clarity. I can assure you, if you've been doing this a long time, and you're because some of you might go, well, I've never have clarity. I just don't, you know, I don't see, you know, it's like I feel like I'm never seeing things clearly. Well, if you've been doing this long enough, you will. There are periods of clarity in the market that you'll go, man, you know, there's without a doubt I should be long or short this, that, the other thing.
I think they made a movie about that, The Fog.
The what?
The Fog, F-O-G.
The fog?
People are always, there's a fog around their screen.
Well, the market always clears up, and that's what I found is even if I'm in a situation where, you know, I might be on the sidelines for a couple of days, taking very few positions, I might look around and go, well, you know, I don't really see anything that looks good, but it does show itself. It'll you know, show itself a little bit, its colors, if you just are patient enough. And this is a game of, you know, waiting things out and being patient. So and like I said, right now I don't see it, but I also target where I think the market's going to go quite a bit too. So if I'm sitting here looking at the dollar index, I might go, hey, if we get up to 90 or maybe 90.15, here, let me show you this. You know, if we get up here, I'm probably going to start looking for some dollar shorts. Flip side is if we get back down towards, you know, towards this 88, maybe 88.70 or so, I might start looking for dollar longs. But right here, we're kind of in no man's land. It's like, okay, well, I have nothing to do at this moment, and it's okay, because it will, the market will show its colors soon enough, and that's what I've always found, if that makes sense.
Above 91, Blake, and I guess, you know, the market should start squeezing, right?
Well, yeah, I mean, that's a tall order for where we're at right now. That doesn't help me with where we're at this moment,
absolutely,
right?
Absolutely.
Yeah, so yeah. I mean, if the dollar index gets above 91, then that's very clear as day to me from here to here. Like this move from here to here will
happen in zero time.
That's a gimme. You know, we get above 91, I can target 91.75 really fast, and I could take a pretty large position just knowing there's going to be a lot of momentum between here and here. But where we're at right now, yeah, I mean, it doesn't help me from where I'm at today. But again, you know, if we're talking about clarity, I'm sure in a day or two or three, we're going to be pretty clear where we're at and where we're going. And sometimes you got to just wait for it. Wait for it.
As the old adage goes, having no position is a position in the market.
It is, and I don't. And if you know, for those people, especially the guys and gals in our private chat room here, guys, you can say hi while we're just messing around. These are guys and gals in our chat room. There's about 97. Of us in here right now. Most of the guys in here, guys and gals in here, know that I do like having my feelers out. I like having, you know, positions. Wrong time for chat room. Must be some, hopefully not pictures of something going on over there. Anyway, most of the people know that if I'm in, you know, I like to have my feelers out, and I like to be in some positions, you know, but like right now, I'm in nothing. I've got no positions on, which is really rare for me. So anyway, Steve, what's happening this morning?
Nothing much, Blake. Since you know, the middle of last week, I'm in exactly the same spot with you. I know that you've entered and exited plenty of positions, but you know that I'm not a very short-term trader, so I'm really sidelined. I had a very good start of February. I made a killing in the first 8-9 days, and honestly, I have no problem sitting on the side until I see, first of all, what happens with risk, which, as you said on the week ahead video, for those that haven't watched, you know, there is a good chance that we can roll over from here, you know, to at least one more leg lower. We are at the 61.8, for example, in the SPX. On the other hand, as you said, dollar, I see the potential for a larger bounce, but we have no confirmation yet. So, you know, I'm just waiting. I know it's not fun, but, you know, sometimes you have to do that.
Yeah, it is. And you know, one of the other things that I'm waiting on, and just if you guys are ForexAnalytix subscribers, you probably look at this and go, wait, how about the dollar yen? The dollar yen's underwater here, this pattern in play. You guys have to understand that I have been short this dollar yen so much over the last month or two, and I'm still looking for a lot lower levels in the dollar yen. Matter of fact, we're getting close to my sell zone. This is one of those currency pairs that I'm really looking forward to. You know, maybe another 30 or 40 pips higher, and then I'm going to lay into it. So I'm you know, I look at this bounce as a, you know, it's kind of like, this is where you have to be patient. You know, you have to start looking for that that potential resumption of trend. But yeah, I mean, it is one of those markets right at this moment, Steve, where, you know, right at this very second in time, where you kind of look around and say, well, you know, what am I going to do, and how are we going to position ourselves? One thing that we should note is the 10-year yield is still, look at how strong it is, and you know, look at how weak bonds are. I sat here and over the weekend, I was thinking the bond market was going to find some sort of support on the 10-year, and I was thinking that we're going to, you know, see some sort of reversal here. We haven't seen that yet. The bond market's still trading extremely heavy.
Although, Blake, sorry to interrupt, although there is the technical potential of descending wedges both in the treasuries and the bond, and equivalently ascending wedge in the yields. The bonds seem to have already made a move, and it makes sense because one thing we need to remind people is that we have the Italian elections in, what is it, 2 weeks now, 2 weeks from now, something like that.
And 2 weeks, yeah, less than 2 weeks.
And the situation there is far from clear. I mean, we were having conversation with Luca, who, as you know, is Italian. He has boots on the ground, and you know, there are several scenarios, and you know, plenty of which are not ideal. So you know, we might get some jitters there, especially that might help, especially the bund. So you know, I think that within the next couple of weeks we should see some risk and volatility, at least having to do with European assets and currencies. So we have to keep that in mind.
Well, you know, maybe that will that'll play into the boon market here in the coming week or so. Well, Steve, I'm going to pass it off to you guys, and I'm sure Stelios is here now, and I'm going to let you talk a little bit more about those descending and ascending wedges in the treasury market.
Absolutely, Blake.
All right, guys. Have a great one today. Thank you.
Go get your 0.5%, buddy.
Yeah, just be patient, guys. Be patient.
All right. Good hunting,
right.
Blake. Steve,
thanks.
How are you?
I'm good, Dale. How have you been? I heard that you spent quite some time watching Winter Olympics, right?
Yeah, you know, it gave me a thought, you know, for the Summer Olympics, that perhaps we could change the photos on our website, the cartoons, to having you throwing the discus and Stelios throwing the javelin on the website. What do you think?
How about me throwing Steve?
Oh, you're not strong enough to lift me, dude.
He's kind of shaped like a javelin, right?
Yeah.
Or like a shot put, a shot put.
A big fat javelin, yeah. I'm kidding. I'm kidding. Sorry, dude.
Oh, God.
Nothing to be sorry about.
All right, so Steve, I know that you're focused and looking for risk off. Do you think that was it in the S&Ps Friday, or there's one more jiggle? How's the action look? I look at the action, and so far nothing impulsive, just sideways grinding. I'm wondering what you think.
This is what I was seeing when we were back there. The potential, you know, for another test, a little bit lower and then a rebound. We didn't go to new lows. We actually posted in essence a double bottom, right?
Yeah.
We did rebound. I was expecting that a rebound might find resistance a little bit lower than where it has found so far. But we pushed all the way to the 61.8 at 27.40.
Doesn't 61.8 feel a little too pat? I mean, everyone,
I know what you
everyone
mean.
that missed the first break is saying, "Wow, I have a chance to sell it at 61.8 back." It's a
listen. I honestly have no idea what's going to happen here, because I've told you many times that I do not trust. That the S&P will react in the way that a healthy market would, because we know that a lot of the bid here is more or less, unfortunately, artificial, central bank bid, etc. But I can tell you one thing for sure. I said that while we were still dropping with momentum, I said that, listen, I cannot exclude the possibility of even pushing to new highs, but I do think that no matter what, this cannot happen in very little time. So the most bullish scenario I can think at the moment is to spend some more time oscillating in this large range between the double bottom and the high that we saw before we actually break higher. So I do still think that volatility, of course, has dropped, and it might drop further if the market wants to remain bullish. But we will still have and see several days, if not weeks, of binary price action. Okay, so we will be seeing ups and downs. So I don't really believe, I think it's a very low chance that, for example, we're going to see some little consolidation here, then a break higher, then a little consolidation, then a break to new highs. I don't think that this scenario is going to play out. I think that we're going to see some selling. Now, is that selling going to take us to new lows? It can, but not necessarily. Okay, I'm not yet convinced that this wild move lower actually gave us a high, but I do believe that this high is going to last for at least several days ahead. I mean, I would more or less guess that the chances of breaking new highs during this month are very negligible, and perhaps even for more weeks to come. So I do think that people should not get overly enthusiastic by buying the dip and thinking that, okay, this is it. In a few days, we'll be cruising to new highs. Also, I don't believe that people should be, convinced that, okay, this price action is impulsive, so we can now treat this as a tradable high, and this is the very beginning of a bear market. So bottom line, watch resistances. For example, selling at the 61.8 makes sense, right? You have a tight reward to risk ratio. Why not seeing a move lower towards 2640, for example? Keep in mind what I mentioned before. We do have the Italian elections coming up, and we've seen often risk spill over from one continent to the other. And especially when a market is a little bit jittery, as the US markets are at the moment following what happened in the beginning of the month, you should keep that in mind. Also, and this is very, very important for risk, I showed these two charts yesterday on the chat room. I think that two of the most clear markets at the moment, at least having to do with technicals and risk, are the DAX, because just look at this. We had a strong move lower from the DAX. We had a break below this expanding triangle. The recovery looks to me like a pennant, and we are about to test. We almost tested actually yesterday the 38.2, and this the broken expanding triangle support as resistance. So for me, especially given the upcoming Italian elections, this is a great reward to risk opportunity if you're looking for another leg lower in the DAX towards the 11,800 area, which, if I zoom out, you can see how important it has been in the past, right?
Our guest today, Steve, I think, is also boots on the ground in Italy.
Then it's extremely interesting. You should really focus. If you want my 50 cents, you should really ask him
what Euro bull. So Fabrizio will be with us at the top of the hour.
Okay, perfect. It's going to be actually it's a very well-timed interview.
It was
because he can. Yeah, he can.
All the best things are accidents, Steve.
Yeah, I know. I have a son.
Oh, that was your best one all year, man.
Yeah, it was a July accident, I know. And this is the FTSE, which I showed yesterday when we were near the highs, because look at it. The FTSE was testing important, also a confluence of horizontal support resistance area and the 38.2. And as you see, the FTSE has already reacted to it. That's what I had drawn many days ago when we were there. And yesterday I posted this on the chat room saying that, listen, be careful, because FTSE and DAX, quite clear shorts. And let me not be misunderstood here. When we say quite clear short or quite clear long, nobody can guarantee you that you'll make money in anything. But somebody can, for example, guarantee you that you have a good reward to risk ratio to make an attempt of something that has decent chances of happening. And if you keep following that, approach, and you're consistent with what you're doing, you can be a profitable trader. Okay. So we mentioned that yesterday in the chat room quite early in the day, and it's rejection from there. So, for example, if you took that opportunity, you would now have a trade that you could manage from the best kind of a position a trader can be. I mean, being in profit and deciding what you're going to do by trailing, for example, your stop to break even or in profit or whatever, and just start picking downside targets. Okay, so I think that this was a great signal here. Now, does that mean that it's going to follow through? Absolutely no. It can go a little bit lower and then push to new highs, and so it's going to be something different. But still, when you have a confluence of resistances, at least you get an opportunity to try. And even if you're wrong, many times you can just exit at break even. I mean, I have that happening to me a lot of times. I shorted last week the Aussie at a very good entry level, and I ended up getting stopped at break even. So I was wrong, but I didn't lose money, right? So having a good technical reason to be short or long at a specific area or at a specific level would at least give you the chance of a reaction that even it's not a reversal, it gives you the ability to exit the market, unscathed. Now, since we talked about the Italian elections and risk, and I think there's not much more to say about risk here, this is the DAX that I was talking about before. So, theoretically speaking, that if we see a reversal from here, I think it would get a lot of people off guard. Why? Because we had a breakdown from a very, very, very important horizontal support, a horizontal support that was holding since 2015. So I bet that a lot of people are now convinced that being short is the right side of the market. And but on the other hand, we tagged the 127.2 of the last correction higher, and we seem to have formed some kind of a descending wedge. Now, for this to play out, of course, we need to get a break above 159.30 because that should start getting some weak shorts out of the market. And as I said, if the Italian elections don't start, looking like they're not going to work, right for Europe as a whole, I think that that should help a lot. But we need to break above 159.30 to get some kind of a confirmation that this is indeed a technical reversal. For now, I'm just monitoring this as a warning, because keep in mind, even if you take it from the perspective of candlesticks, we had a very nice morning star formation here. So you can see why we cover many forms of analysis, simply because when they all point to something, the chances of that something happening are higher. Okay, here we got a nice morning star formation. Morning star formations are some of the most reliable reversal patterns. Okay, this is of course a bullish reversal pattern. We also got, from a technical perspective, a descending wedge. Now, for the time being, what have we seen here? We broke above it. We came down today and retested it, perfectly retested it, and we're again at the highs of the day. So far, so good. But as I said, what needs here, for extra to happen, to have extra confirmation, to at least see, in the short-term time frames, a higher high. Where is that going to happen? If we get a daily close above 159.30, yeah. So then things will start becoming more interesting. Okay, so this is the market I'm very, very closely monitoring. The treasuries have not been that bold yet. They also found a very interesting technical level. What was that? Of the 9-month recovery, in essence, the 9-month correct shape, and they potentially can also be forming a descending wedge. So, does that mean that we should be bullish? Absolutely not. We haven't even broken above the descending wedge, but it is another formation in another market I'm monitoring, because if I see these moves, start happening, let me add to this that I showed that on Friday, and this move has already happened. This is the 4-hour chart of the USD yen. We had a descending wedge as well here, and this descending wedge has already broken. Of course, Blake already showed that on the daily chart. That can be enough perhaps to extend this push higher towards this zone, but unless we break above that zone, we can view that as a temporary rebound. Regardless, the signal that this was a descending wedge was the correct one. So let's see if it's correct one for the other. Features that we're monitoring as well. Number of than just a rebound, but you never know. Reversals do not happen every day, and you should not be treating it as a reversal, because in the vast majority of the cases, you'll find yourself being in the wrong side of the market. But reversals do happen. Now let's have a look at the euro, because I know a lot of people are monitoring it, and they're constantly looking for a high. And then I can go over questions. I'm pretty sure we will have a decent amount of them, given the fact that we didn't have a webinar yesterday. Okay, now the euro. A nice reversal. That was a key reversal actually for the euro that we got on Friday, because we saw incrementally push to new highs, and then we reversed and closed at the lows of the day lower than the previous day.
Near the end of the day, it was a very sneaky one.
Yeah, it was a sneaky one. You're absolutely right about that.
The failure happened when most people had called it a week.
Indeed. Yeah. So the question is here: can we trust that as
bitches?
Can we trust this as a reversal? Depends. First of all, we have a reliable RSI divergence here. I'm saying reliable because the first reading was above the 70 line, the second reading was below the 70 line. Okay, that's something I take notice of. On the other hand, as I said, from a candlestick perspective, we had a key reversal. That's also something important to note. Now, let's go to basic technicals. Is this a reversal? Not yet. Not yet, because we haven't done any technical damage to this chart. We haven't even managed to break below the 23.6 of this last leg higher. We haven't managed, most importantly, to break below this ascending channel. And even if that happens, we would at least then need to break below 121.60. So, of course, somebody can go ahead and ask, okay, wait a second. If we have like one target and then another target and then another target, and then we're down to 121.60, we've already lost like 300 pips of downside. Yes, that is absolutely correct. But, you need to be very careful or extra careful and either be good enough to top pick something or wait for confirmation, because this chart, you zoom out, since the very, very, very beginning of 2017 is nothing but bullish. We had a very strong move higher, a clearly corrective move lower. We were saying, people that have been listening to us for a long time know that we kept repeating that this move that we saw was corrective, because we kept repeating that, listen, be careful. The move lower in the euro has been overlapping, has been slow, has been choppy. All these are clear indications that the move lower is corrective and the chances of another break to new highs are very high. So once again, I'm going to say here that yes, we're seeing a very nice, rejection from Friday, but do we have confirmation that this thing is rolling over and it's going a lot lower? No, absolutely we don't. Now, if things with the Italian elections get messed up, yes, the euro can accelerate lower and see a deeper pullback. So, you want to jump the gun and assume what's going to happen there. And one of the reasons I think that the euro is underperforming is at least because we have the jitters and the worries of what's going to happen with that. So now you see that we're getting in a period that the euro pound might, and this is a big if, of course, because we've been trapped in a range, but there is a chance that it will finally make the next move to the downside. Okay, I'm not telling you that you should jump the gun, but at least from a macro perspective, I can now see that we are in a period that can actually finally bring some movement to this pair and some resolution from this prolonged, choppy, slightly descending channel / range that we've been trapped for a long time. Okay, so I think that given how many tests we had at this 38.2, at 89.22, I think that, if you want to be short the euro pound, at least you have an area to use as a stop loss, which is still, rather close. So
Steve?
A good chance that the PIX overperform. Yes, Telio?
Sorry, I just wanted to add something. When you're done, no problem.
Telio?
Hello?
No, okay, absolutely. Go ahead. Yes.
No, I just wanted to add. You're talking about euro pound and all that. You know my view. I've been a sterling bull for some time now, and I don't know if you saw today's headlines, which came across, and the sterling caught a bid against pretty much all currencies for a bit, which was that there were sources within the EU that the UK might get a special kind of one-off treatment in terms of trade and and basically the agreement that's going to occur when the UK leaves the EU. And these are they're not subtle anymore. No, these are hints of what might happen and what I think is likely to happen, which is both sides will find some kind of a good agreement to move forward, because it's to the best interest of both sides. We've said this many times. And yet the market
absolutely
is kind of moving and then just ignoring it. You saw what happened today. Like cable went up, almost 80, 90 pips, then came right back. Actually, now it's at the high, near the highs.
Now it's at the high. Actually, yeah, we have a hammer so far on the daily. And something, I don't know exactly what kind of a form this move lower will end up having, because it can be a pennant. So we might see some movement like this. It can end up being a flag, right?
Yeah.
But so far, what matters is that this price action looks 100% corrective so far. And I will be of the same opinion if in an orderly way we come down to retest the 136 area. So keep that in mind, people that want to be short the cable. As we were saying about the euro, when it was correcting lower, there is nothing bearish so far with cable's price action. Absolutely nothing. Okay. I mean, the market still says here that the direction you should be looking is still higher. Now, if something changes dramatically and we start seeing, let's say from here, an impulsive move lower, like day after day, big black candles, then we can have another discussion. But so far, nothing points to a bearish reversal. Okay, and I want to make that 100% clear.
And Steve, I want to remind people just one more thing. I've been saying this for weeks and months. We are always one major headline away from a sterling squeeze.
Squeeze, absolutely.
And it's not, and you know, I personally think it's going to happen. Obviously, people might disagree, but the hints over the last couple of months have been constructive. You know, all the comments have been constructive. Okay, there's nothing concrete yet, obviously, but it will happen at some point. And when that happens, and when they announce how it's going to move forward, then that's it. That's it for sterling. You know, I think euro pound is going to break below that that little channel that you had before. And you know, what's the next level? You know, 84 and 80. You know, it's gonna, you know, pick a number. So because people are still very skeptical, and I understand people being skeptical 6 months ago, but now that things are slowly kind of moving forward, okay, not in huge steps, but it's getting there. So now I don't get it. I don't understand why people are still so skeptical about what's going to happen. I mean, obviously anything can happen. I don't know what's going to happen, but I'm just saying I think probabilities are on that side.
No, I'm with you there, Stelio. I'm with you there. By the way, we have some questions. One has to do with the Aussie. Aussie, so far, a very nice rejection from the 61.8. Now, what's going to happen from here? I'll tell you. I want to see what's going to happen from the zone we're currently testing, the 79 zone. Let me repeat. As you see, I always have on my charts zones. I'm not of the belief that the market is something that works in a perfect way. So I don't believe that saying that, okay, 79.12 is support. Because what does that mean? So if we go to 79.05, you know, you've broken support? No. The market works with zones. Okay. So we're currently at the bottom of the zone. Now, if we break below there, I think that the chances that this was a rebound and one more leg lower is coming, as you see, that's why I had drawn that when we were at the highs. I said that, listen, a move lower from here needs to also break 79. If it breaks 79, then the chances of another push to 77.40, the chances are very high. Okay, so I think today we're going to get, you know, a good idea of what's going to happen from there. Same with the Kiwi. We're seeing a potential of a double top, but to begin with, we need to see what's going to happen from this 73.30 area of support. Okay, if we break below there, then we open up the 72.20 area, and if we break below that, then I think that you know, Kiwi is going to be in a hell lot of trouble. Ronit mentions, to me, it's all about rates now, because 90.86 to 90.87 market went up 13 months, 53%. So from 18,000, 50% is around 27K Dow. Bonds started falling fast. That caused the shock in most markets. Yeah, there are a lot of resemblances, both with the 1929 and the 1987 markets. And we need to see if it's going to play out like that. But yeah, having to do with how the dollar behaved, how rates behaved, and what was the catalyst that actually brought the market on its knees, we are seeing a lot of resemblances, mate. I mentioned it as well the other day, and I agree 100% with you. We have questions about plenty of pound pairs, actually. We have questions about pound Swiss, pound Aussie. Okay, let's have a look at them one by one. Pound Aussie. Okay, this is a pound Aussie. So far, so good. I don't like the fact that the price action has been slow and choppy, but we have to admit that since we found a low, we have been trading within an ascending channel. That ascending channel is holding. Also, this horizontal support area is holding. We broke below it today, like briefly, and now we're again at the highs. So, you know, I remain bullish, but I'm not trading it because, as I said, the price action is slow and choppy. I think, you know, there are better opportunities out there. Regardless, it remains, even if you see a long-term chart, you can see that this was a major breakout from this triangle. We came down, we retested it, like for one day, we even broke below it, but now we're rebounding again from there. So I think that, you know, the bias remains a long one. Now, pound Swiss, I haven't seen that in a long time. Let's see what we had drawn back there. Okay, back then we had drawn these two possibilities, that if we break below this formation, it's not exactly a channel, then we can easily push down there. If we broke above it, we could then get rejected and push lower. In essence, if you remember, I said that I believe that the pound Swiss is going to move lower simply because this channeled appreciation was clearly a corrective move to this leg lower, right? So if you see, I was looking for a move lower either directly or after a rebound to new highs. And actually, if you see, we got the second scenario, rebounding new highs, because incrementally we did post a new high, and we found resistance once again at this ascending channel resistance. Now, what happens from here? I think that we can easily come down to retest the channel once again. Right. We also have this area of support that hosts the 200 DMA. So I would say that now we can delete all that because these things have happened. I think that we can come down to retest this area. If we break below that area, then down to retest the channel. So we saw pound Swiss, we saw pound yen. Question about pound yen. Okay. First of all, we had this ascending wedge. We had warned that this might be an ascending wedge like several weeks ago, if I remember right. And Gregor had also mentioned it. And the reason we were saying that was because, yes, pound yen kept being bullish in the sense that it kept posting higher highs, but clearly there was a lack of upside momentum. So that pointed to the possibility of an ascending wedge, and that got confirmed when we broke below there. And as you see, we accelerated, we came down, we retested the 148 area once again. Just look how important this 148 area has been. Acted once as a major resistance. I mean, it pushed the pair lower for months. Second time, third time. After we managed to break above it, it acted as support 1, 2, 3, 4, 5 times. Now we came down, we retested it once again, and it's holding. So for the time being, the pound yen is trapped below the 148 area, which obviously being short the pound yen near 148 makes no sense. Keep in mind that we also have the 200 DMA here. So, and we also have this ascending trend line. So in essence, as we speak, the 148 area is a triple confluence of supports. Bottom line, being short near 148 makes no sense. Being such a major support area, you have two choices. Either be patient and see if you really believe it's going to break lower, confirm that it's going to break lower, or be long, since reward to risk ratio is going to be amazing in that case. On the other hand, unless we clear 152.80 to the upside, we cannot really just ignore the move that happened from these highs. Bottom line, I think that selling rebounds for another move lower is a high probability trade, but don't count on 148 breaking easily, which means that whenever you want to sell a rebound, you'd rather collect profits or whatever near 148, because unless we confirm a break below there, there is no confirmation of a bigger breakdown from this recovery that started at the end of 2016. Okay, this is another market that needs patience. I heard you breathe, Dale, which tells me that I need to check my watch, right?
Oh, I'm sorry, I actually burped. I have commodity digestion.
Okay, so I'm guessing our friend is here, and we need to wrap it. Okay,
here.
Perfect. So I'm looking forward to hearing this interview and hearing what he thinks about the Italian elections.
Yeah,
among other things.
I think we'll start there. Okay.
Yeah, I think it's a good start.
Right.
Okay, perfect.
All right.
Perfect. Okay, thank you, everybody. We'll see you tomorrow or in the chat room.
Nice job of describing neutral markets today, Steve. You got to talk about things even when there's nothing happening, right? So.
You know, it depends on the time frame that you're looking for. There are always things to talk about in the markets, right?
That's true. Okay.
That's also good. You know, the good aspect about covering a lot of markets. There is always something to look at. And by the way, give me just 10 seconds because I forgot about that. We had a question about USD ZAR. I'm going to answer that within literally 10 seconds.
Go ahead.
Listen, I know that you're seeing a possibility of a reversal here, and yes, there is. But just look at this chart. One consolidation after the next are breaking to the downside, meaning no confirmation of a reversal yet. We at least need to see a break above 11, let's say 82, and we can then discuss about other possibilities. But this market remains bearish until proven otherwise, and not the opposite. Okay, thank you, Dale.
You're welcome, buddy. Okay, Fabrizio, I'm going to make you the presenter now. Thank you for your return visit to FACE. Looking forward to speaking to you and talking politics and markets with you, my trading warrior brother. Hi, Fabrizio. Waiting to hear you. Unmute yourself. Yes, no one has you muted, so you have to just.
No, he's not muted. Yes, he's not muted. He's unmuted. So make sure, Fabrizio, make sure that from the panel on the right-hand side you have selected. There is a tab called Audio. Make sure you have selected the proper headset or anyhow microphone you want to use.
Yeah.
Oh, now we can hear something.
All right. Hi, Fabrizio.
Can you hear me now?
I can.
Yes.
Yeah.
Wonderful.
Can hear you loud and clear. Loud and clear.
10-4. Can you see my screen, gentlemen?
Yes, we can.
Very good. So now,
welcome back to FACE.
thank you very much. Thank you to you, and hello to everybody. And again, it's thank you for your hospitality. And again, it's an honor to be here with you. You know, I'm an Italian, so sometimes we are very shy.
Yeah, you ladies, man. How old are you? How old are you, Fabrizio?
I just turned 61 one week ago. One week ago.
We're kind of in the, the same Geritol generation. Let me ask you this, about 20, 30 years ago, because of your name, did people give you a nickname of Fabio?
Okay, my nickname in US is Fab. Okay, because in the other part of the world, especially in Italy, is FAF, Fab. But let's say Fab. The very problem is that I spent about 30 years spelling my last name with the Giorgio Fili, and everybody say on the other side of the telephone or the desk say, well, say it again. So J is in John, O is in Oscar, etc., etc.
Yeah, so you got tired of it.
It's well, no, I'm tired. I'm used actually. It's a challenge every single time.
All right, so why don't we start with what Steve Bolge was talking about, which most likely is the biggest fundamental. I mean, we already know what's happening with yields. The biggest fundamental hanging over the euro right now may be the Italian elections. You're on the ground there. Do you have a view about different types of outcomes in this election that's only a few weeks away and what impact it may have on the markets?
Absolutely. Let me add one thing if I can. Sure. I don't remember the name of the last gentleman that spoke, and my compliments. I agree with all of you, and it's a real pleasure to be part of your show, correct? And but I'm really impressed. I have to tell you that I'm not a flatteur, as we say in French. So, but it's please remind me the name of the gentleman, because every single word is said, I completely agree.
I'm Steve.
Steve
I'm Steve Fabrizio. Nice to meet you. I'm Steve.
Nice meeting you, Fabrizio. Nice meeting you.
Your two countries used to go to war against each other a lot.
Well, probably we made
in the Roman era.
Yeah, I know. Where is he from? From Romania or from
Greece?
From Greece. Okay, sorry.
Steve built Trojan horses.
Sorry, I made a big gaffe, as we say in French. Greece, of course. Well, we all come from Greece. I mean, the greatest. Well, okay. You know how to say? Stevie knows that. Una facia, una razia. You know.
Una facia, una razia. Indeed. We have many similarities. We're both people that live on the Mediterranean, and we have very many. Yes, absolutely.
Exactly. So it's very beautiful. So sorry for what it was.
And you're both lousy in Winter Olympics.
Yeah, okay, very good.
Except you know that you do have a good speed skater. I saw a good speed skater. So
okay.
why don't you tell us about the election here, buddy?
Okay, let me get into election. Sorry, I didn't say hello to you, my warrior brother. Okay, elections. This time, elections in Italy are less. The market implies, in terms of fixed income, it implies less risk than before. Elections now in this country are very confused, but the outlook is, let's say, sharply clear, so that the right will win. The right coalition will win, because, as you probably remember, I don't want to make a long.
Because of immigration, anti-immigration.
Well, this is not a problem. It's more than a disaster. It's something that doesn't. You cannot even consider what kind of disaster is that. If you just to give you one figure, we deploy for nothing 4.5 billion euros, which is roughly 6 billion US dollar, for somebody who has no right to stay in this country. The 5%, less than the 5% of the people who are hosted and pampered in this country, they have no right. So we, very simply, the very left, which has been ruled by, this country has been ruled. Remember one thing, excuse me if I make a step back. We had the last election, so the last time that the people was allowed to choose the politics, the form of government, was in 2008. Since then, there's been a number of coup of states, of coup, as we say, that avoided the people to vote. So we've been ruled by, I don't want to, it doesn't matter what kind of political party I am. Probably you understand that I'm conservative, from the conservative side, and not in a mild manner. Well, they ruled in that way, and actually they brought the country, especially Monti, they brought this country in a very, 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 very serious situation. So sad. This country has been always, since 30, 40 years, mildly center-right, and never center-left. Back to the point, what is the outlook for the election? Polls, for what they count, polls are giving the right side coalition ahead, on the brink, on the possibility to, with a new electoral law, to set up a stable government, without making a large coalition, so without the need to onboard other parties which are not coherent with the center left, center right.
Okay, so what is their platform?
Say it again. Sorry.
What is their platform? What do they stand for?
Well, the platform is flat tax, which is something that we always been proposing. A flat tax, as 42 countries in the world have. For example, Russia has a flat tax. Other countries like Bulgaria, Romania, Poland, Latvia, small countries, they do have a flat tax. Some part of the United States, they do have. I don't want to enter into something which is more technical for me than.
Okay, that's one aspect of it. We know what a flat tax is. What else?
Yeah. Other aspect is absolutely security. We are in a total unsecure environment because we have criminal. We are plenty of criminal, Italian criminal. You know, there is a large amount, but we don't need to have.
Immigrant criminals.
Yes, an extra immigrant criminals. So try to imagine that 60% of the inmates in jails are not from Italy. 60%. 60%. So security, flag tax, defense of the borders, working on to be stronger in front of the euro, because so far we have been.
So are they anti or pro euro?
Myself, anti.
No, the part is the center right.
Well, the center right, it's let's say it's a split. 60% it's anti-euro, and 40% is per euro. For a very simple reason that one of the major exponent of the Forza Italia, of the Berlusconi party, is the president of the European Commission.
Okay,
so
he holds a position on the EU.
Say again?
EU
Sorry?
hierarchy. Okay.
So and those are the point. There is a number of promises, as everyone does in during the politics, during the campaign. But what is interesting in this moment is that the market, and you can see it from the spread, provided that we are under a QE, so it's controlled. The spread between the 10 years benchmark, Italian 10 years benchmark, and the 10 years benchmark German, the Bund 10 years, it's 134. To give you a benchmark, 3 months ago it was fetched up to 155. So market implies, and that's the interesting point, implies not a great risk. The only great risk that we could have is that the Movimento 5 Stelle, which is a single party who is gathering a hefty percentage, ranging around in between 27 and 29% by himself, and it's absolutely unfitted to rule, because they rule in certain regions, in certain cities, like Rome, for example, and it's a full disaster. They have no idea how to run a car. Try to imagine how they have an idea to run a city complicated like Rome, or to run a country, and they have zero clear ideas. So the only spike that we could have and doubt that we could have in this in terms of markets is if M56 Movimento 5 Stelle will win.
And they're what? They're left, way left.
They're nothing. Nobody knows it.
No one knows where they stand. How about any of the parties talking about addressing the vulnerable state of Italian banks that trade sometimes in decimal points?
Absolutely, yes. Situation of the NPL, the non-performing loans in Italy, it's dramatic. It's dramatic because they've been telling a story since Monti in 2011 took the power, saying that everything was fine. Like you remember Tim Geithner, all fine at Tim Geithner?
Yeah,
everything is fine.
Bernanke,
Geithner, everything is fine.
The mortgage prices,
yes, all fine. That's no problem. After 2 years and a half, we discovered in 2014 we discovered that the NPL situation was gigantic. And it was very simple. Why was gigantic? Because the Monti government worked in order to shrink the demand and bring to collapse the country because, and this is too long story, and if you are interested, we will talk another time, because Germany and France were interested in that. So to squeeze Italy, Monti squeezed the internal demand, and definitely the corporation exposed toward the financial system were unable to repay their debt. So NPL came from that. Let me add one thing, but the 70% of the critical mass of the NPL come from the big corporations. So everything is very much tangled, and to untangle that situation, it's not easy. Of course, we're talking about that. Of course, we have a number of companies aggregating together, or banking institution aggregating. We have a number of banks in a very good shape, like Intesa San Paolo, like Unicredit, like UBI, and some small company, especially bank corporation that gather NPL and then cartelize, securitize, and resell it for 15-20 cents a dollar. But situation is complicated. Let's say we are not on the brink as we were before, because for a number of reasons. Back to the square one. From what we see, market does not imply a very high risk at the moment. We are only 14 days ahead of the almost something more than 14 days ahead of the elections. So nothing. Market hasn't started to move swiftly. Interest rates, bonds. To move swiftly, which is something that happened before and always happened in Europe, because European politics is much more complicated and
more to assume the risk into a political event like this. So yeah, some nice coverage of what's happening in Italy. How does this play into? I know we chatted a little bit into your very constructive, bullish view on euro.
Okay. Yes. How much time do I have? 3:19. Okay. Let me give a very short introduction. Very simply. I don't know if you agree with me, gentlemen, but the situation now is very unclear. There is a number of things. There is opportunities and pain somewhere. Pain and opportunity, the point is, from who they will be paying and from whom there will be opportunities.
Right.
This is totally unclear, because from the point of view of the different issues, the fact is that let's start with volatility, which is something that everybody knows that volatility will remain high above. This is my opinion, okay, very own opinion. I express my very own opinion and share with bankers and asset managers. We will remain above the 2022, in the range of 2022. The fact is that it's not that any individual asset class look irrational in isolation. It is just that the combination of the narrative across all the assets is are incompatible. So there is all the number of the pieces of the puzzle are not fitting together. So equities are rallying on the argument that inflation, talking about worldwide and especially US, the argument that inflation remains in the Goldilocks zone. We are not anymore in the Goldilocks zone. The Goldilocks zone is ended at the end of December, beginning of January. The narration is no risk of deflation, but the climbing prices isn't fast enough, in my opinion, to trigger any major Fed aggression. The ramp up in fiscal stimulus and the tax reform will encourage the inflows into US stocks, and there is a but that I don't know how to, the blank space, I don't know how to fill it. Rates are moving higher, and then you can see it. If you see my screen, you can see it clearly. Rates are moving higher on the perception that there are clear signs of accelerating inflation, and hence, from there, the bond bull market is, in my opinion, dead and buried. Increased supplies in bond is suddenly a major negative for treasuries, and the higher real yields offer no attraction, even though everyone is supposedly is desperate to chase any return available in other asset classes, namely equities.
So you're saying that dividend producing equities are more attractive than yield producing treasuries?
Definitely yes. If you think that high yield bond yields are lower than investment grade, that gives you a perfect, and the average dividend yields of in general of the Italian exchanges, Italian indexes is above 3.8, you can imagine that with some corporation deploying 5.5%, not small but huge, like Eni, which is one of the biggest oil corporation in the world and the biggest in Italy. So people is looking for alternative investment, alternative assets, and this is it. For what is concerning the ethics, in my opinion, the U.S. structural deficit are apparently undermining the nation's prospect. So, and probably leading to an acceleration or reserve diversification away from the dollar assets. This is something very important. So both interest rates and growth no longer, this is key point. If you agree or not, I'd like to know it. Both interest rates and growth no longer drive currencies. You can see it every single day. And much higher US real yields are now irrelevant, and hence, so is inflation.
What's driving the dollar? It's more of a lack of confidence rather than yields, higher yields making it attractive. I tweeted that for over a year people have been trying to figure out why the dollar hasn't appreciated with higher yields. And I said, if you bought long-term paper in a depreciating currency, wouldn't you want to get paid more?
This is an answer that I'm unable this is, excuse me, the question that I'm unable to answer.
Okay.
This is the major concern for me. I'm not concerned at all in anything in my life, anyway, especially in my job, in the job. But this is something that does not allow me to build up, to open large positions in portfolio, to add position and open a large number of positions in portfolio management, and in having a better outlook of how which one would be the direction, the constructed direction of the currencies. If you see this chart that is illuminated on my screen, which is the one that I showed you in November, if you probably remember, shaded in orange, it's the yield, the benchmark 10 years USD 10-year yield benchmark, and in blue, in magenta, whatever, is the DXY. If you remember, my assumption at the end of November was, okay, gentlemen, rates are poised to go up, so dollar will have to go up. And instead, the spread, as you can see from here to here, what we were talking last time was this time here. So I suppose that was converging in a mean reverting, and the model was giving the same thing. And instead, it kept going down, and it kept going up. If you remember, shifting to a chart, I indicated, I'm not a predictor. I never seen a predictor in my life reach. So I trade, as you know, because we are from the same school. I trade what I see, not what I imagine. So day by day, one step after the other, of course, with the general outlook, which makes sense. But first, I was bearish until mid-October, bearish on dollar and bullish, excuse me, on euro, and bullish on dollar. But then, after a certain moment, I completely reversed myself, even in positions in loss, even covered, but in loss. And then I reversed and I said, euro is unstoppable. If you remember, but I don't think so, because you have a zillion of people hosted by you, so I'm the last one to be remembered. I pointed out 120. 120 when we were about 112, something like that, was September, October, November. We were about 116.
Nice call.
116. I called 120, 122, and I was conservative, because I'm always conservative in that. I prefer to gain less and then re-enter into correction and then go up. So that level was that I canceled to make the chart not that cluttered. Then spoke up to 25, and I said 25 is not enough. There will be 26. After the VIX, let's call it manipulation or manipulation. That's another interesting story, because it's something impossible that happened. And I don't know if we have time to discuss about that and just show it. When we had from the beginning of December, end of December, beginning of January, VIX going up and SPX going up. It is impossible per se. It is impossible unless someone rigged the market. So everyone has been able to see that disrupted inverse correlation, which became a positive correlation until the whole game ended up, and everything came down in a certain manner with a cold. I called that drop in order to be able to buy. I worked 70% on derivatives and currencies, and the rest in equities and fixed income. But the fact is that from that moment, and in the moment in which the euro fetched up to 25, everyone, first one was UBS, called 130, 136. And if you see the headline here, in PPP terms, given by the OECD calculation and the ECB study, ECB study, the euro at 125 is 8% undervalued. So 8% of 125 it's around 137. Let me add this. After that, after US, Credit Suisse came with a range of 30, 32 by the end of the year. Finally, those are financial institutions. When you come to the CEO of Airbus, which is probably everybody knows Airbus, which is the main competitor of Boeing in airline in the airline industries. 4 days ago said we are perfectly geared up for an euro at 22.32. When you have that kind of a statement, you consider that empirically, heuristically, the euro is, in my very own opinion, unstoppable. I've been listening the very interesting contribution of Steve about GDP, and I perfectly agree with that, perfectly, 150%. If you can, you even say that, because it was something we used to say in the 70s and the 80s. And euro is, in my opinion, graphically, but then even with other tools, directed toward at least 128. As you can see, the target that I have, and I get more practical.
So would you buy it right? Would you buy it right here, right now, after this pullback from 25.80? We've gotten to about the 23 handle or so. Is that pullback a buy?
This pullback is a buy. Yeah. I've been on.
Where would your view change? Under 120, under 119, 118, the picture changes.
Yeah, I never never say never. I stated that was very unlikely for the euro to go below 123. Instead, it did it. It did it for a number of reasons, due to interest rate, due to the deflecting, to the steepening of the curve, of the curve of the 2/10 in US. So the increase of the steepening of the curve and the increase of the yields, but in this moment the consolidation, technically speaking, consolidation is very clear. We talk here is weekly. If you go to the on I don't have to tell it to you, gentlemen. If you go on daily, it's very simple. It's very clear. I do not expect euro below 122 again, below 122. Probably a little spike under a little spike under 23, 122, 125, 122 and something. Not very much below. This one is the line on the sand.
Okay, so 122 back under 122 would change your bullish posture?
Below 120. Let's make the figure clear. Below 121.54, the situation can change because very simply, I'm not a magician. It's 50% from the higher high and the lower low, and this target, which was I never supposed would have been touched, has been touched. We are in 26. Well, we're actually not arrived at 26. We arrived at 125.60, 125.55, and that is something. Next target.
What is that blue line up there? Is that a moving average or a trend line?
Which one is it?
On top, the line that it just hit. Yeah.
This one. This is now. It's a trend line coming from the very top.
Okay. So
it's a trend line.
Watching that. Okay.
Yes, it's this one. It's coming from the very top, and this one it's always been very much effective and efficient. But by and large, I always draw several trend lines because they come from, as I told you last time, from Tom DeMark trend lines. They are very effective to me. That they give me certain objective in high and in low, a number of objectives. And those are my target. So my call, if I'm allowed to say that, is step by step, as I always do, one step at a time, one day after the other. It's 128.32. Then we'll have to take away 129. That would be a very, very, very tough barrier. And then by the end of the year, probably we will be directed to 132.4. If you see AB equals CDs, this movement equal to AB equal to BC, which is this one, brings me exactly to 135.53.
Yeah. Okay, so it's equality.
Yes, it's equality. It's
from the 103 wave to 120.
It's a double drive.
Pips.
It's a double drive. You know that. But what is interesting is again this. I work with different tools, and if you see, this is on a very short time frame, in the 60 minutes. In red, it's a spot euro. Okay. In black dotted, it's the 25 delta risk reversal. What is a 25 delta risk reversal? There is a ATM at the money ATM risk reversal, which is neutral, and there is a 25 delta risk reversal and a 10 delta risk reversal. 25 delta risk reversal means buy a 0.25 delta call and sell a minus 0.25 delta put. So it's not more neutral. It's more, let's call it volatile. To make a long story very simple and very short, why do I use that besides the activity in FX options, which is much more complicated than in equity or in commodities, because it does give me again. Let me add one thing. This is, as you can see here, on a very short time frame. So spot, of course, and 1 week 25 delta risk reversal. What is in this case the usefulness of this because since market is driven by interest rates and by the auction, the price action is driven by the interest rates and price auction. So price action and auction. On the other side, what is implied inside the prices of the options and the way that the optionists, the market makers, and the large option traders in price the underlying, it's very interesting. It's very important. As a matter of fact, you see there I have, let's make it simple. It's a kind of overbought, oversold. It's a kind of, let's say another way, it's a Bollinger Band, you know, a little bit more concrete. Bollinger works on standard deviation, and here we're working on people bidding and asking, bidding and asking and selling options, or selling strategy, like in this case. Is always a little bit ahead, and so gives me a strength of the movement. If I add this, which is the, if it comes out, let me see, because I don't know why it doesn't come out. If I add the realized volatility, then I don't know why it doesn't appear, because one sec, there is always some problem, always. Again, well, we can see the historical volatility is on 1 week, but we can see it on 3 months, which is more it's more interesting. You can see that that once the implied volatility, or the 25 delta risk reversal, or the ATM implied volatility of an option cross up the historical volatility, that is a sell. When crosses down, that is a buy. Unfortunately, as always happens, it doesn't show me but that doesn't matter. It doesn't matter. It would be even more cluttered. Let's see if it's here. No, is that here? No. Okay, no problem.
Okay, buddy. So the major point is when volatility blows up.
Yeah, as a matter of fact,
the euro's overvalued and comes down, and when volatility is crosses to the downside with very low volatility readings, the bias is to the upside in the euro.
Exactly.
Okay. Well, what a great interview, Fabrizio.
Wow. Thank you very much for that. I thank you for your hospitality. I thank you always
really,
for your hospitality.
Huh?
I always thank you for your hospitality, and it's a pleasure to discuss with the people like you. It's a real treat. I can say that.
Well,
let me add a couple of things
for us too.
Gold falling apart, and CL going down, and European market. This is the point. European market flat, and ES inching down. So make it to come to a conclusion. Situation is absolutely unclear. But there is opportunity to make money. There is always opportunity to make money. Always.
Right. There's always another trade, another bus around the corner, another train to catch, and sometimes we see the market better from the sidelines so that we could see the forest from the tree. So thank you so much, my trading warrior brother.
Thank you to you. Thank you to you guys.
Appreciate you being with us, and people that want to follow your work, you could follow Fabrizio on Twitter at Warburg100. He used to be with Warburg Pinkert.
Yes,
you know that the firm was not Warburg Pincus, it was Warburg Pinkert.
Yes.
My relatives, Warburg Pinkert. A long time ago, which is a very renowned old money institution. Are they still around?
Yeah, it was in England because
okay.
Because Warburg was German, from Hamburg, and then they moved to England, and they joined with the Pinkert. Okay. And then they changed it.
No, I'm kidding. It's really Pincus, not Pinkert. I'm Pinkert. So that was just a fantasy that I was born with a silver spoon in my mouth, but I wasn't.
And I was following you because
I had to kick open every door to open for me. What?
And I was following you because for the respect that I have to you. Because I perfectly know what I'm thinking.
All right. Good hunting, and let's get back together in a few months and see how things stack up. See if we get to your targets. Okay, buddy?
Okay. Thank you very much again. And it's been a real pleasure, and I hope I give my contribution, a valuable contribution.
It was great, especially your work on the market and giving us some idea of what's happening to the politics on the ground in Italy. Arrivederci, bro.
Arrivederci, my friend.
All right.
Warrior brothers and every day, and goodbye to everybody. Bye-bye to everybody, and my compliments again. You are very skilled and very good. Appreciated that.
Thank you, Fabrizio, and
thank you to you. Thank you for your contribution.
Okay, we'll have turnaround Tuesday, tomorrow, Wednesday. So turnaround Tuesday is Wednesday. See everyone for our session tomorrow. Thank you, my trading warrior brothers and sisters, for your attention. Maybe I'll see you in the private chat room. Adios.
Adios. Ciao.
Adios.
Adios.